For decades, one of the defining features of the global financial landscape has been China's significant holdings of U.S. government debt. Everybody knows how China not only holds U.S. government debt, but it was once known as the single largest holder ever, surpassing many of America's greatest allies. Here's a graph on the largest foreign holders of United States Treasury securities as of early 2024. Here you can see that the largest foreign holder is no other than Japan, holding over $1.1 trillion. But previously, China was in the lead. Here's an updated graph with data from 2018. Here you can see that China used to be the largest holder of U.S. debt. But since then, China's holdings of U.S. debt has been in decline. At the current trend that we are seeing, it might even be possible that China would one day become one of the lowest owners of U.S. debt among major economies. So, what would happen if that day does come true? Would it destabilize the global economy? Or would other investors simply fill the gap? Well, to understand that, let's first talk about what a U.S. government debt is. When we talk about U.S. government debt, we are typically referring to securities issued by the Department of the Treasury to finance the government's obligations. These securities include Treasury bills, short-term, Treasury notes, medium-term, and Treasury bonds, long-term. Collectively, these are often called Treasuries, or T-bills, T-notes, and T-bonds. Here's a graph on the total U.S. federal debt, data from the U.S. Department of the Treasury. Here you can see that U.S. federal debt has risen tremendously, with the latest data available as of the time of writing amounting to over $35.4 trillion for the third quarter of 2024. China owns a portion of this debt, which, as we saw earlier, is just around mid-$700 billion. That debt is also shared by Japan, other foreign countries, pensions funds, central banks, and even domestic American investors. So, why buy U.S. Treasuries? Well, U.S. Treasuries are widely seen as having minimal default risk. They are amongst the safest forms of investments out there. Then, secondly, the U.S. Treasury market is large and active, enabling buyers to enter and exit positions more easily. That means if China wanted to sell billions of treasuries overnight, they could, since there are investors with big wallets that can buy their positions. Thirdly, the US dollar is the world's primary reserve currency. Many central banks hold a substantial share of their foreign exchange reserves in dollar-denominated assets. Hence, as you can see, China acquired US treasuries based on these reasons. But of course, there are many more reasons out there. Now, let's understand how and why China became one of the largest holders of U.S. Treasury holdings. China's large-scale accumulation of U.S. treasuries began in earnest in the early 2000s. During this period, China's economy was rapidly expanding. They were the place to invest. American investors to European giants and East Asian companies were all opening up factories or partnering with Chinese companies. This enabled China to earn a lot of money from international trade. Because they were manufacturing and exporting a large portion of the world's goods, China amassed an unprecedented amount of foreign currency, particularly US dollars. This is because when China exports a good, or basically sells it to other countries, they then receive US dollars. And when they export something, or sell something more than they import or buy something, that would accumulate large amounts of US dollars. Here's a graph on China's total reserves, data from the World Bank. Here, you can see that China's reserves have gone up rapidly. This is a reflection of the large trade surplus it had with the world. China was just exporting more goods than it imported. But one cannot just leave their reserves to a bank. If they did, it would mean missing out on potential returns. One of the ways for them to earn money from this big amount of reserves is to invest them. And what better way is it to invest them than in a safe asset like U.S. Treasuries? Hence, the People's Bank of China, PBOC, purchased U.S. Treasuries. Over time, these holdings grew dramatically. Here's a graph on the foreign holders of U.S. Treasury from 2000 to 2008. Here you can see that the largest foreign owner of U.S. Treasuries was always Japan. Japan was, after all, the major Asian economic powerhouse, which saw huge amounts of trade surplus with the United States. Just like China, Japan had to put that money to use, hence, as you can see, their U.S. Treasury holdings were massive. In 2000, Japan held over $307 billion worth of U.S. Treasuries. China, however, only held $70 billion. But as the economy of China and Japan shifted, China would eventually surpass Japan as the largest holder of U.S. Treasury. As you can see from this graph right here, China's holdings of U.S. Treasury rose from $70 billion in 2000 to more than $700 billion by 2008. Japan, on the other hand, also saw their U.S. Treasury holdings increase from around $300 billion to more than $600 billion. By 2013, it reached a peak of over $1.3 trillion. Since 2013, however, China's holdings of U.S. Treasury has declined, and as of the latest data available, as of the time of writing for October 2024, U.S. Treasury holdings of China stood at only $760 billion. So, now let's talk about why China is selling U.S. Treasuries and what it can mean for the United States. There's a lot of reasons for the decline in U.S. Treasuries for China. But one of the most important reasons is simply because of China's investment into the Belt and Road Initiative, BRI. The BRI was one of the most ambitious infrastructure and economic development projects ever launched, aiming to connect Asia, Europe, Africa, and beyond through a network of roads, railways, ports, and pipelines. And China is using a portion of its foreign reserves to invest in the Belt and Road Initiative. Here's a graph on the annual Chinese investment into the BRI from 2013 to 2023. Here you can see that in every single year, the investments were massive. In 2018, it rose to more than $50 billion. That is no small amount. And to finance these infrastructure projects and ambitious goals, one of the ways they find money is to use their foreign reserves. Secondly, there's also BRICS. BRICS is short for Brazil, Russia, India, China, and South Africa, a group of emerging economies that have formed a cooperative alliance to promote economic, political, and social collaboration. BRICS was established to provide a counterbalance to Western-dominated financial institutions like the International Monetary Fund, IMF, and the World Bank. This very group, where China is a member of, has been together reducing their holdings of U.S. Treasuries. By collectively reducing their reliance on U.S. Treasuries, BRICS countries aim to diversify their reserves, promote the use of local currencies, and develop financial systems that are less vulnerable to the policies of Western financial institutions. Thirdly, China has also been accumulating gold reserves. Here's a graph on China's gold reserves in tons. Here you can see that in the very same years that we saw China's total U.S. Treasuries decline, their gold reserves have increased. This is both because of the need for diversification, but as well as their strategic intent to strengthen economic sovereignty. By shifting away from U.S. Treasuries and accumulating gold, China aims to protect itself from potential financial disruptions caused by external pressures, including geopolitical tensions and sanctions. Now, let's talk about the potential consequences of China selling or stopping its purchase of U.S. debt, or even selling off some of its existing holdings. The United States could face various repercussions. However, the severity of these effects would depend on many other factors, including how other investors respond. One of the most direct impacts could be on U.S. Treasury yields. In bond markets, prices move inversely to yields. If a large holder like China scales back purchases, the reduced demand could push Treasury prices down and yields up. Higher yields on Treasuries would translate into higher borrowing costs for the US government. Another potential impact is on the value of the US dollar. If China sells large amounts of Treasuries and reduces its dollar holdings, the dollar could weaken. While a weaker dollar might make US exports cheaper and more competitive globally, it could also make imports more expensive, leading to higher prices for everyday goods and services. A major sell-off of US Treasuries by China might also cause nervousness in global markets. Treasuries are seen as one of the safest investments, so if confidence in them wavers, it could create instability in financial markets. That said, the US Treasury market is huge, with daily trading volumes often exceeding $500 billion. So, while a large Chinese shift would certainly grab headlines, the market depth might absorb some of the impact, especially if other investors see Treasuries as attractive. So, the question of what happens if China stops buying US debt is important for the global economy. China's massive investment in US Treasuries has not only helped finance American deficits, but has also given China a stable place to park its surplus dollars. But as the trend of China's reduction in US Treasuries shows, the future is changing. But anyway, do let us know what you think. Thanks for watching.